Let's put some questions to Vishal Gutka, AVP Consumer and Media at Phillip Capital, and talk about really what lies ahead. Vishal, thanks very much for joining in, and I'm sure you were hearing the rap that Mangalam brought in. And I'll straight away get to the question that, it's like, ye dil mange more. Market wants more from FMCG companies. This middling, mid-single-digit growth, that's clearly not enough to inspire a bigger move in stocks, given the valuations. What do you see ahead for the FMCG pack? I mean, December quarter and then, onwards this year.
Yeah, so good morning, first of all, and wishing you happy New Year's to all your viewers. What we believe that for next 1 year, things are likely to slow down further rather than seeing an uptick. What are we seeing on the ground is that rural demand continues to be under stress. There is no meaningful signs of recovery out over here. All the people in the ecosystem, right from the consumer till distributor, is into some kind of pain. In this context, what we are seeing is that regional brands per se are doing much better than national brands because they are fulfilling what is required from the end of customer as well as what is required from the end of mom and pop stores. Customers at this point of time require benefit in form of lower price. And when you see from the context of retailers, they require higher margins and higher credit periods. Regional brands are in a much better position to provide that benefit. So what we believe that, and the data that is what is coming up, then second quarter, then we'll have a Kharif season and the normal monsoon. If it plays out well, then the recovery that could happen in a very meaningful manner, that could happen in second half 25, for the second half of 25 onwards, we could.
All the FMCG space, because in the space itself, the larger players have underperformed, whereas regional specific players or category specific players have done really well. Case in point, you had Varun Beverages that outperformed, you have Jyothy players that have done a lot better, Honasa for instance. So category leaders and region leaders are the way to go, according to you?
Yeah. So we would like to have a bottoms-up approach rather than going top-down approach. So companies which are investing to category management change, where the management is very, very aggressive towards category development, case of GGPL. Those companies continue to do well. I think they will continue to outperform the overall index. Index might remain subdued for a year, my kind of time frame. Because large cap, it remains sideways till the next budget is announced. I think that budget will come post the new government is sworn in somewhere around the month of June. So I think the index might remain sideways, but stock specific continue to do well. So Honasa, where it is showing much better growth rates in the BPC category than HUL, what we are seeing over the past few quarters.
Okay, all right. Hi Vishal, good to have you in the studio. For FMCG companies, some of them have given us a cheat sheet. Given by what you have seen, who do you think is best placed for the current quarter, in terms of maybe a relative outperformance coming in?
Sure. Thinking the food companies continue to do very better than beauty and personal or HPC companies. So Nestle and Tata Consumer continue to outperform on that basket. Jyothy Labs has been doing excellence in terms of execution, in terms of their distribution ramp up. So they are doing very well on that front. Market share gains has been across the board in most of their categories. So these are a few of the companies that do much better. On the jewelry side, I think Titan is one of the companies which should report very, very strong numbers. Formalization story continues to pan out over there. I think they are reporting better numbers out over there. So there are a few companies, jewelry space is looking good, and within consumer basket, I think Jyothy Labs and food companies might report better numbers during the quarter.
So your top buys would be as of now?
So top buys for us, from a medium term perspective, is Godrej Consumer in the mid cap space, and in large cap space, we continue like Nestle and ITC.
All right. And your views on paint sector? Because so much happening out there. Crude prices are down, but so much competition likely to come as well.
Sure. So paint near-term numbers are looking pretty good. I think couple of quarters are likely to be. Grasim launch, which was supposed to happen in the month of March, based upon the channel checks, is suggesting it might get postponed to April and May, because their thought process is that they want to launch on a pan-India basis rather than launch in a specific region. So I think there's going to be a lot of noise in this sector. Although the competitor might not be able to gain meaningful share from market leader, but there's going to be a lot of noise that could lead to time correction happening in the paint stocks as a whole.
Okay. All right. Vishal, we'll leave it on that note. Thank you very much for joining in and giving us a nice wrap of how the season might play out. And we look forward to more conversations as we get.
Thank you. Thank you so much for having me over here. Thank you.
Thank you.